All right. Some pretty drastic moves yesterday, and a little bit of I don't know, right? And that's okay. To say no idea. Look around, try to find information, and when you can't find it, just chalk it up to something unusual is going on that you got to pay attention to and move forward with that. The I don't know comes from the move in the dollar yesterday, which was a part of the entire shift in market sentiment yesterday. So like we do every morning, we want to start out taking a look with what's going on around the world. I use Finance Juice. If you got something better, by all means, throw it at me in the comments. I'd be willing to check it out. This may not be the best thing out there, but it's free and it's customizable. So you can go in and adjust, where some of the sources come from. Finance Juice is a news aggregate agency. So, maybe there's places you don't want news from. If you make a free account, you can adjust it. I'm not trying to promote them like some kind of commercial. I just use them, right? I'm not certainly not getting anything out of it. We have the ECB today, and they're looking at doing a 50 basis point or a 75 basis point rate hike. And it seems like the collected wisdom is 75 points. If they're wrong and the ECB hits them with a 50, they're very likely going to unwind those 25 basis points that had been priced in for the 75. We're going to see Europe go into the close to the upside, providing a little bit of a rocket boost to our market. So certainly something to keep our eye on. On the other side of that, we also have Powell speaking today. Now, it's not a policy speak, right? He's not coming out representing the FOMC after a meeting where they've made policy decisions. It's not that, but it is still a platform and a forum where he can talk. He can make a gaffe, right? He could stick his foot in his mouth and really screw it up. He could give it that hawkish bent or a little bit of a dovish bent. When we talk about the plunge protection team and how the markets are very easily manipulated and controlled, we don't necessarily imply that they're going out there buying and selling and trading into the market to drive price up or down. They don't have to. All they have to do is go out and chip their teeth. Right? If they get to talking in a way that appears dovish to the rest of the market, then the market's going to start unwinding a lot of these basis points that have been priced into the market. And if they come out really hawkish, then the market's going to go in and price more basis points into the market. It's really as simple as that. So we want to be listening today to see what Powell has to say, and if he has some bent, if he's going to be coming in, with any kind of preconceived agenda, or if it's just towing the line operation, don't rock the boat, and his ultimate goal would be to just say a bunch of words without really saying anything at all. So we got a number of speakers today. Powell's only one of them. We also have Evans, and we've got Yellen. Now, this one's important, right? When we just come right back to that dollar again from yesterday, the absolutely extreme move in the dollar over the last few days has been a part of that beatdown. Well, yesterday, the dollar turned around and headed to the downside, like throwing a brick in the water. And the more it fell, the more we rallied across the board. The anticipated suggestion was that we weren't going to see a move like that in the dollar unless Yellen came out chipping her teeth like she did back in into May and into June, where we started to get that bottoming formation in the S&P and we rallied up. That was Yellen. She didn't talk yesterday. And if she did, I certainly didn't find it. I looked all over the place yesterday to try to find out who moved the dollar. I couldn't find it. I couldn't find it at all. But she is scheduled to speak today. So then when we look back at that dollar and ask the question, is this a one-day wonder? Is it going to actually hold below 110? If she's coming out today to put the smackdown on the dollar, then yeah, it is going to hold below that 110, at least for a little while. And that is going to fuel the equity rally to the upside before the September FOMC meeting. Just keep in mind, you still got PPI, CPI, and then you got the actual FOMC. And we're only one nation, right? There's going to be Fed speakers around the world making policy decisions and rate decisions in September. So, it's certainly not going to be a straight line back to the upside if this rally sticks through the morning. So really pay attention to Yellen today. Be cautious with your charts if you're, looking to get a trade this afternoon. Watch the clock. Now, finance juice is set to my time zone. So it says 1300. It's 1 o'clock. But that's 2 o'clock market time. Make sure you know where these events line up in your time frame, right? And I don't care where you live, so I don't want to hear it. You should be able to do that kind of math on your own. It's not that complicated. Now, while we're here, you can also scroll down to the market wrap. And I find this really valuable when I'm trying to figure out what the heck happened today, right? Because they'll do it for our market just as much as they do it for Asia and Europe. I usually just, it's a short thing to read. I go through it, make sure I got an idea of what's going on. And collectively, the entire market over there is holding its breath, waiting for this ECB decision. And then it's going to rock and roll. And not much of a surprise. It's what our market does right before a rate decision, right? We collectively see volume drop and we all sit around waiting for the event. And then we get that volatility. Well, that's exactly what's going on this morning. So not much of a surprise. Start out here on a daily chart for a moment. Yesterday's moves with that break to the upside in the ES, goalposts and pivot points all the way through the morning. Inside day breakout, and then we made it through the close and the open of 9.2, 9.1. Got all above all of that. The one that we couldn't get through is the top of 9.2. It's at 40.19. It's a really big, significant candle now. 2 candles really close together. When we're thinking about like inside day breakouts, IX10, inside days, when you get a really big candle like this and then you spend a week inside that candle, it doesn't really hold as much weight as it would if we were, holding inside of a candle that was a third of this size, right? So we very likely could end up with a few more days inside of that 9.2 candle, September 2. We could, but it doesn't have as much impact or as much significance just because of how absolutely big it is. And now we've got a smaller one, but the same thing going on from yesterday. Now, one day does not make a rally, right? And it's really important to grasp that logic. One day alone does not make a rally. And while there are a lot of tools that suggest that this was the bottom back in June, and that we're not going to revisit that, those tools can only see what exactly what they're looking at. They're not looking at a collective database like you should. For an example, put call ratio. It's one data point. You wouldn't base your entire portfolio off of that one little bit of information. Look at the VIX, the dollar, what's going on in the bonds. Then bring in some indicators if that's your jam, right? You want to look at a MACD or an RSI. Look at what's going on in euro dollar or dollar Japan. That would give you collective amount of data to make a more informed decision. All right, volume's a little light this morning. Again, not much of a surprise when we have Powell on deck and we have the ECB on deck. We've had a very muted range in the overnight hours. We are above the weekly pivot point. So at least we have that going for us. We cannot stay here, right? Very often when it comes to the market, we try not to make a definitive statement because we know price can really do whatever it wants. So when we say, you know, price can't stay here, technically we shouldn't say that. It could. Price can do whatever it wants. It could stay there. My argument is that that is a very, very small range in a market that has a fairly significant amount of volatility in it, and that price just could not stay here, especially when we got Powell and the ECB. Once they start opening up, I expect this range to begin opening up. So the other promise comes in, and the promise is we won't stay here forever. So we might stay in this range for a little while, but we are going to leave. That's what you really want to start gaming out. Is it going to be a continuation of yesterday? Is the news today coming out of the ECB rate decision and whatever with Powell? Is it going to be enough to continue that galvanizing move from yesterday? We're not looking for any kind of wishy-washy, muddy waters, just continuing the chop like what we had say Tuesday or even last Thursday. Very clear, definitive price action. A good start with that would be breaking above our own Globex high 39.95. Getting above that 4,000 would be another step. We've got an ADR half at 40.16, and that lines up perfectly with that high of Friday. Now, it's not to the tick, but it's close enough. It's an entire zone, 40.16 to 40.20. If we break above that, then out there on the higher time frames, we'll be above all of that trash. We'll be above that big September 2 bar. We are going to get a lower high. That's a given, right? There's absolutely nothing that they can do about it. So we set a high, we set a lower high. We're now looking for a new lower high. Where that lower high, happens to show up, 40.75 maybe. And that's if things maintain this positive bent from yesterday. The full ADR is 40.53, and the previous week's high is 40.72, right? Which I just mentioned off of the daily. So what if things get just downright nasty instead? We're going to look to break that weekly pivot point at 39.70. The daily pivot point, 39.50. ADR half, 39.43. Then we got a very large area that we might want to throw some pivots into. And then we have the full ADR, 39.06. This is a really large area that needs some pivots. if you were to measure the Globex range that we've had so far, it lines up right with half the ADR. And that's fine. It gives us a 50% that we can add to the mix, 39.56. $39.31, $39.17, and then $39.06 for the ADR half. So we just add in a couple of those pivot points, kind of fill the hole. Now, another thing you could do would be to put a fib from the lowest point of yesterday to the highest point of yesterday. Or not even just a fib, just the quant line. If we were out on the daily chart, for an example, and we were to snap that line, we would just be measuring that really big candle of yesterday. 50% of it, 39.36, 25%, 75%. That wouldn't be a bad idea either. And you could also carry forward the Globex high, which isn't getting marked by that indicator that I have. I got tired of that being marked, so I took it out of there. So that'd be 39.23, which lined up with that other drawing that I had put on. It's always nice when your drawings overlap each other, kind of giving each other validity. Right, so that games us out. That puts all of our pivots in place. Remember, you want to start with like a top-down approach, right? Go out to the daily, go out to the weekly, take a look around, ask some basic questions like, hey, are we going to hit a big major moving average today? Because if we are, you're probably going to want to know that. That way, when you start to ask, what did we hit? Oh, the 10-period moving average was right there, or the 50. Now, when it comes to these moving averages on the higher time frame, if it's the 10 and the 20, it's not really a big deal. You start getting into the 50 and the 200, you might want to look at it from both perspectives, from an EMS or an EMA and an SMA, rather than just always doing one or always doing the other. So for an example, if you look at the 50-period moving average, whether it's the EMA or the SMA, we've got a little bit of separation there. 40.27 is within the numbers that I mentioned earlier. So we very likely could hit the 50-period moving average today. Price also crossed through the 4-period moving average yesterday, and it has the 10 overhead, right around that 4,000 level. So we've got a lot of overhead resistance. People ask me all the time, should I use the EMA? Should I use the SMA? I say, look at both. At least recognize that there's this huge pool of people that are going to do the EMA. And conversely, there's a whole big pool of people that's going to do the SMA. And we're trying to figure out what everybody else is looking at. Not because we want to mimic what they're doing, but because we'll better understand price action if we can better understand what people are looking at. Right. And when the entire marketplace sees a pivot point, price reacts. Well, when the entire marketplace is looking at a 50, price is going to react. On the weekly time frame, we've got the 4 and then the 10 over our head. 40-20 is where the 4-period moving average is. 40-42. Well, yeah, 40-42 is close enough. That's where the 10-week is. Now, 10-week is a really important level when you're using things like Investors Business Daily, and the 10-day is an important level when you use other services, right? So the 10 is it's a pretty powerful moving average. It'd be worth knowing where those levels are at on the intraday. So here, for an example, are those moving averages on the intraday chart. That's the 10 period right over our head. And that's the 4 period underneath us that we crossed through yesterday. Look how price hit that 4 period yesterday and just got stuck there and fought it for a long time before it finally made it through. And once it got through resistance, it tested it as support before finally getting and moving on. Same thing back here, 4 period moving average. Got above it, was just holding it, checking it for support. Support didn't hold, fell back through it. Price responds to these levels, so you may as well keep your eye on where those levels are at. Start the top-down approach, go out to the weekly, the daily, a 1 hour. Just look at where the major moving averages are at and ask that question. Are we moving towards one? Are we going to hit one today? Or did we already hit it and are we moving away from it? It will provide more understanding and context for the kind of price that you see. We pegged out in the advancing versus the declining issues yesterday. And this entire thing really kicked off more as a short squeeze rally than anything else. That move in the dollar came later. Really, really narrow 10-day, 30-minute volume profile. The weekly pivot point just underneath this, the point of control. I mean, we're there right now. I mentioned the high of Friday. It's kind of in a shallow area volume wise. So if we make a move towards that high of Friday, we're very likely going to go right through it. You know, I say that, but price doesn't move in a straight line generally, unless it's to the downside, it seems. So if we are to get bullish and make that break to the upside today, just keep in mind, trapped traders could still be sitting there, right? We're always looking for liquidity, price, and pivot points. Liquidity is usually on the other side of the pivot point. So we don't expect price to stop right on a dime. But when we're thinking about reversal zones, if we see price moving up into that direction today, and we're thinking about, could it reverse? That'd be one spot that if we were going to reverse, it's where I would expect to see it happen. It doesn't mean we're going to reverse, just hear it again. If we were going to reverse, that's a real likely spot of where that reversal could happen. Above that, 40-43, it's a value area high. The point of control for the amount of time spent is below us, 39. It's at the cog line, 39.32. It's really, the cog is 39.31, but it's close enough. If things get nasty today and we start making our way back to the downside, there is some volume at that same area, right? So we got the TPO showing a point of control at 39.32. We also have a pretty good amount of volume there. Now, it's not a handrail that I would lean on, but it's still something that I would focus on for a minor speed bump on the way to the downside if things were to get nasty. We've more than exceeded that head and shoulders down there. So we take it off the table, just like the other head and shoulders that we had, 2 weeks ago. Once the pattern's been played out, we're done with it. Well, we're done with it. Always fun having to move in pivot points. All right. So we do have an untouched point of control from Friday sitting over our head, 40.13.5. It's really close to that cog line at 40.11. So if we do make that break to the upside, keep in mind that that is still up there. The head and shoulders that I was talking about from the higher time frame that's already done, its 50% move is over our head. Not really as needed now. And once we pass back through that, I won't be keeping it. That one will get taken off. For a move back down, if things were to get nasty, there's really not a lot down there to help us out on the TPO volume profile side of things. All right, from this perspective, it might not look like much, but that move in the dollar yesterday was pretty significant. Right? It was a pretty extreme move. And you can see here this morning, we broke structure again, and we're headed to the downside. That gives us a double bottom in play right now. If we break that, next pivot down is right around the 109 area. 110 was our benchmark just to start things off. We really want that dollar back below 105, and it's got some work to do to get there. We needed this dollar to pull back if we were going to get a rally, but so far that wasn't a pullback. That's not two-sided price action. Let's say it that way. That's a complete liquidation break. There was absolutely nobody trying to go long in the dollar yesterday, right? That was one-sided price action. Everybody's selling. And the only up moves that we've seen at all is profit taking. And on the other side of that, we had stocks and bonds moving in the same direction. So we had that rally yesterday in the bonds, and it's carried it through into the overnight. Now the bonds are testing another breakout in the Globex to the upside. Bonds up, yields down, or rates down. Tech likes that. This is the 10-year, which reminds me, we didn't do this morning, and we certainly need to. Full house. The IRC hit a major level this week. And we've got a 3-month bill announcement today at 11 o'clock. 11:30 additional auctions, including the IRC, including that 3-month. That's not the level I'm looking for. There it is, the IRX, not the IRC. Now we started to get just a little bit of a pullback, but we're still in that expansion from the weekly breakout. And there's a lot of talk across the board about how this is going to impact things. And there's a whole lot of really smart people who say, I have no idea how bad it's going to get when this rejects, especially if the rejection ends up being multiple points in a single day. So we got a lot of fireworks on the table. We've got an energy crisis that could unravel global markets and make 2007, 2008 look like a test drive. Add to that the European Central Bank today raising at least 50. That's like their base argument, and possibly 75 basis points. And then Powell coming out today with the possibility of saying goodness knows what. All right, look what he did at Jackson Hole. He was supposed to speak for 30 minutes. He came out for like 8.5 minutes and put the smackdown on, did a mic drop, and walked away. So don't look for any kind of signals to go long or short until at least the afternoon today. Let's get through the rest of those auctions first, and then try to figure out what we're going to do. So we're looking at crude here. You could use, USO, WTIC, CL, whatever, right? Just looking at crude. The capital rotation is still in play. It was supposed to be rotation out of energy and into tech, but we didn't rotate into tech, which is why we started getting all of that volatility. Well, if we start rotating now, finally, into tech, we're still going to see that rotation out of energy. So the expectation is that we're going to continue to fade off. And the targets were below 85 gets us to 80, and then 75, and then 70. Some pivot points along the way, certainly going to be bumping our head, right? It won't be a straight shot. Keep in mind that there was a hurricane spotted. It's not in the Gulf yet, but if it gets in the Gulf and it shuts everything down there, then we could see an immediate reversal in energy. As of yesterday, 4042 was the gamma flip level in the SPX. GNRC is the market you're going to want to keep your eye on. If we do get a confirmed hurricane in the Gulf of Mexico, you're likely to see a spike in that energy. If you're still looking at natural gas, EQT is the largest natural gas name in the US. The volatility in the crude market is still relatively flat. So we're going to be looking for a break to the upside above 59. There was a tweet that had come out yesterday. It's really it's worth looking at. Yeah, find the darn thing. All right, I think I found it. Oh, great. I've been sharing the wrong screen. Ha ha ha. Sorry, guys. That new change in the OBS has just been pretty cool, but pretty crazy too. So that isn't going to help you out much. Sorry, I'll post the Zoom when we're done and put on a proper YouTube one. All right, this right here, this came from Sentiment Trader, so it's not mine. I didn't make it. I didn't find it. I didn't make it, right? So I'm not trying to take credit for something that isn't mine. I found this on Twitter. It came from Sentiment Trader. I don't know who that is, but if you look back through his Twitter, the guy, the person, the individual really seems to know what they're talking about, and they back it up with where their data comes from, right? I like it when people share their sources of information, so I know they're not just pulling smoke out of their beep. That's a significant level of activity right there, right? And track it back to like the 08-09 housing crisis kind of moves. Look at where COVID was at in this and the levels that we reached during COVID. So it's pretty significant. it's absolutely worth taking a look at. There was a large amount of hedge repositioning. It wasn't new hedges. The guy made that really clear. It wasn't new hedges. It was repositioning existing hedges. And it's going to change where the GEX and DEX levels are at. So really, I mean, it just comes down again to, we need the information. We need to see how this is going to play out with ECB. We need to hear from Yellen today and from Powell. After those three are done, then we'll have a much better idea of what to do going forward. All right, we're getting a little bit of a pullback in dollar versus yen. And this ties in to a lot of things, right? The deeper I learn on the Forex side of things, the more I start to see those missing pieces on a lot of things, right? When we would see moves in the S&P and the NASDAQ, and we would go check all the normal things that we would look at, and we couldn't find any answers for, hey, why did the market just move like that? And there'd be no news. There'd be nothing on our regular signals. And we're getting these significant changes across the board in odd things like gold or the bonds, or in stocks like S&P and NASDAQ. And I had that suspicion that it was directly connected to Forex. But since I don't trade Forex, and I hadn't really put in a lot of time to learn about Forex, then it was that missing piece of the puzzle. So if you're looking to increase your understanding of what's going on in a day-to-day basis, start looking at Forex. It certainly has a lot of information out there that you can learn about, right? Like the dollar yen. It's a proxy for a number of things. Understanding that connection will give you a better understanding of why we would want to go over and look at it at least once a day, see where it's at, right? Now for the yuan or the dollar China, Thinkorswim doesn't do a good job here. I usually have to go over to something like TradingView for that. Obviously, you're not going to want to buy a TradingView account just to be able to do something like that, right? So kind of look around. You may not have access to every one of these pair groups, at least not for free, right? You might have to like get a subscription to something. At the very least, try to tie it into something where they at least provide an article about it, right? Maybe they do a write-up on it once a day to give you some insight on it, just something like that. Heck, even just go out and hit Twitter and find a Forex trader or an influencer who looks at these Forex pairs and provides insight. Of course, you got to be careful with that, right? You don't want to end up with just some random Joe Schmo living in his mommy's basement. There's really no reason to go through any of the stock charts this morning, not until we get these answers from what's going on in the ECB, what we're going to get out of Powell, and definitely what Yellen has to say. Now, it says tentative here, so she might not show up at 2. She could be early, could be late. Definitely keep your eye on anything that might hint about where her time frame is going to be. And we can see the ECB had their news. So that's one of them that we were waiting on. Not too violent for us yet. All right, so on the right side of my screen, I've got the dollar. On the left side, I've got the euro dollar pair. We've still got that double bottom at 1094. It's holding for the moment. If that holds and we start to rally up there, you could get a short-term play in the ES, right? Or in the NASDAQ, just a little bit of something to get by until we get closer to the open. Keep in mind the dollar and the bonds both open, between 8 and 820. So we generally get a little volatility out of them anyways. I'm going to leave it there. I will get the YouTube video fixed. I'll just take the Zoom recording and get it loaded, and I'll delete this one. I'm going to get this OBS figured out. For 2 days, I had the mute on, so that didn't help you guys any. And then, of course, today, the wrong screen. The new setup looks really good on OBS. I got to admit, I mean, when I got the upgrade, I'm like, wow, this is a really nice upgrade. But I'm not used to using it, so I keep screwing it up, but I'll get it. That's what I got, guys. Be careful, be safe. This should be the start of some answers that we've been looking for, right? Because there's no if. By the end of the day, we should have very clear, definitive answers on the pivot. Are we headed back up to the 43, or are we headed back down to the 37? I like knowing that that's where we're at, right? That we actually are going to have an answer by this afternoon. All right, everybody. I'll see y'all tomorrow.